All right. Well, Ed Yardeni is president at Yardeni Research. Ed, good morning. Good to have you with us here. Thank you very much for your time. I mean, last week, Ed, the big talking point, of course, was the NVIDIA numbers and the upgrades it's seen and the continued momentum. It's like the big leader for everything AI related, right? So, and we've been talking about this US market concentration for a while. What's your sense? I mean, does it give you, because it's been such a big important driver for the market overall in the US, does it give you confidence that the market there perhaps continues to do well because it lifts so many other boats along with it?
Well, it has, but as you point out, even among the Magnificent Seven, NVIDIA stands out. Not all of them are doing anywhere near as well as NVIDIA. The other thing that we have to recognize is the reason NVIDIA is doing so well is because other technology companies are spending a huge amount of money on its GPU chips. And so there's a lot of capital spending that's going to be weighing on the technology profitability of some of the other companies. So I think, this idea that everybody's going to benefit from AI, we have to recognize that there's going to have to be a lot of money spent just to develop it.
Okay. Ed, hi, good morning. All eyes will be on the Indian markets as we head into the election counting day on the 4th of June, which is next week. And, this run-up has been pretty solid. I mean, our markets have been at record highs, in tandem, of course, with global markets. But your thoughts on how one should approach it, given that we have a big event upon us?
Well, I think the market's discounted a lot of very, very good news. And I think the market's expecting a fairly smooth political transition after the election, that nothing much will change. Sometimes the market likes certainty rather than uncertainty, and that might help to keep the market going to the upside. But again, it has discounted a lot of very good news. And then I think it's going to start to get some competition among global investors as global investors look for something somewhat cheaper than India, and China stands out. There are certainly some signs that the Chinese government is doing everything they can to revive their economy. Their industrial profits just came out, and they are showing some signs of recovery.
Hi, Ed. Good morning and good to see you. That's an important point you're making, because if I look at MSCI China, well, it's outperformed MSCI India, and it's outperformed by a good deal. It tells you that maybe, in fact, valuations are becoming a bit of a pain point for India. But I wanted to ask you about the flows. The FI flows coming to India, particularly in the last 45 days or so, it's slowed down dramatically. They have turned sellers. And yes, that could be because outflows coming out of the emerging markets. But India has come in for a particular harder hit, in the sense the flows are a little higher. Do you think post the election verdict, they return back to India?
Well, I think again, I don't think there's going to be any big surprise to investors with regards to the election. So I don't know that the election is a real issue for foreign direct investment. I think these things kind of come and go. I think the basic trend is clearly for more money to go into India by global investors seeking opportunities in an economy that's growing rapidly, an economy with a relatively young workforce, and an economy that is fundamentally capitalistic in its nature. So I think India is still going to remain very attractive for foreign direct investors.
Okay, nice. On that optimistic note, India is going to remain very attractive for foreign investors. We'll thank you, Ed, for joining in and appreciate your time here on CNBC TV 18.